Welcome to SG Investment. Our channel is dedicated to helping you make informed decisions about your money and to guiding you on your journey towards financial success. Subscribe now and join our community of like-minded individuals on the path to financial freedom. Warren Buffett Investment Strategy. Warren Buffett is an American business magnate, investor, and philanthropist. He is considered one of the most successful investors in the world and is often referred to as the Oracle of Omaha for his ability to generate consistently high returns for his investors. He is the chairman and largest shareholder of Berkshire Hathaway, a multinational conglomerate holding company headquartered in Omaha, Nebraska. Buffett began his career as a stockbroker and eventually became a successful investor and businessman. He is known for his value investing approach, which involves looking for undervalued companies with strong fundamentals and the potential for growth. He also has a reputation for being a long-term investor, holding stocks for years or even decades. Here are investment strategies can be learned from Warren Buffett. 1. Long-term investment horizon. One of Warren Buffett's core investment strategies is to hold stocks for the long term. He believes that the stock market is inherently volatile in the short term and that trying to time the market or make quick trades is a losing proposition. Instead, he looks for companies with strong fundamentals and the potential for long-term growth, and holds onto them for years or even decades. This approach allows him to ride out market fluctuations and capitalize on the compounding of returns over time. 2. Focus on fundamental analysis. Buffett is a proponent of fundamental analysis, which involves looking at a company's financials, management, and industry trends to determine if it is a good investment. He is particularly interested in a company's earnings and earnings growth, as well as its return on equity and return on assets. He also pays attention to the company's management team, looking for experienced and capable leaders who have a track record of success. Additionally, he examines the industry trends to identify companies that are well-positioned to benefit from long-term growth opportunities. 3. Value investing. Buffett is a value investor, which means that he looks for undervalued companies that have strong fundamentals and the potential for growth. He looks for companies that are trading at a discount to their intrinsic value, which is the value that the company would be worth if it were liquidated. He believes that by buying these companies at a discount, he can earn a higher return on investment. 4. Diversification. Buffett believes in spreading investments across multiple companies and industries to reduce risk. He doesn't believe in putting all his eggs in one basket. By diversifying his portfolio, he reduces the risk of losing all his money if one company or industry performs poorly. 5. Avoiding trendy or speculative investments. Buffett avoids investing in trendy or speculative companies, such as those in the technology or biotechnology sectors. He believes that these companies often have high valuations and uncertain futures, which makes them a risky investment. Instead, he focuses on companies in more established industries with a track record of success. 6. Avoiding debt. Buffett avoids investing in companies with high levels of debt, as this can increase risk. He believes that companies with high debt levels are more vulnerable to economic downturns and interest rate hikes, which can lead to financial distress. 7. Patience. Buffett is patient and willing to wait for the right investment opportunities. He doesn't feel the need to invest in a company just because it's currently in vogue or because he has cash to spend. He waits for opportunities that meet his investment criteria and then moves quickly when he finds them. 8. Focus on cash flow. Buffett looks for companies that generate strong cash flow, as this is a good indicator of a company's health. A company that generates a lot of cash flow has a strong business model and is able to pay its bills and reinvest in growth. 9. Avoiding overpaying. Buffett avoids paying more for a stock than its intrinsic value. He doesn't believe in overpaying for a company, as this reduces the potential return on investment. He is always looking for a margin of safety, which means that he wants to buy a stock at a discount to its intrinsic value. 10. Continuously learning and improving. Buffett is always looking to improve his investment knowledge and skills. He is constantly reading and studying the markets, companies, and industry trends. He believes that by staying informed and up-to-date, he can make better investment decisions and achieve better returns. He also encourages his team to do the same. Conclusion. Warren Buffett is a successful American business magnate, investor, and philanthropist. He is often referred to as the Oracle of Omaha for his ability to generate consistently high returns for his investors. He is the chairman and largest shareholder of Berkshire Hathaway, a multinational conglomerate holding company headquartered in Omaha, Nebraska. He is known for his value investing approach, which involves looking for undervalued companies with strong fundamentals and the potential for growth. He also has a reputation for being a long-term investor, holding stocks for years or even decades. His investment strategies include long-term investment horizon, focus on fundamental analysis, value investing, diversification, avoiding trendy or speculative investments, avoiding debt, patience, focus on cash flow and avoiding overpaying. Thanks for watching. Don't forget to like, comment, and share.